So Bitcoin really is deflationary money, and its value should go up forever, as Michael Saylor points out, in terms of goods and services, because we're going to get better and better at producing goods and services, yet there'll only be a certain fixed number of Bitcoin. So, the beautiful thing about Bitcoin is it allows the average person to save in the form of a currency that will increase in value, not decrease in value. That's a big difference. It allows you to retire with comfort. It allows you to build wealth without having to take enormous risk. I mean, the government to admit that this is a form of money that they think is strategically important vis-a-vis other countries. To me, it's still amazing we're not at higher numbers. I mean, every millionaire in the world can't have one Bitcoin. So if you've got one Bitcoin, kind of by definition, you're a millionaire. I mean, it may only say $80,000 today, but you're a millionaire, as we reset.
Lawrence Lepard's claim that a significant change in the global financial system is imminent is among his most startling claims. Amidst the concerning rate of devaluation of the US dollar, people, businesses, and even nation-states are searching for alternatives. Bitcoin and gold are the two most promising possibilities, according to Lepard. He draws attention to Bitcoin's revolutionary function as a store of value, setting it apart from fiat currencies that gradually lose purchasing power as a result of inflation. As Michael Saylor frequently highlights, Bitcoin's limited supply guarantees that its value will probably increase over time, providing a safe alternative to riskier assets for preserving money. This video will go into greater detail on Lawrence Lepard's opinions on the changing financial scene and the reasons he thinks gold and Bitcoin will be essential in safeguarding wealth from systemic threats. Take a moment to like this video, subscribe to the channel, and turn on notifications for more content on Bitcoin and the digital asset space.
So Bitcoin really is deflationary money, and its value should go up forever, as Michael Saylor points out, in terms of goods and services, because we're going to get better and better at producing goods and services, yet there'll only be a certain fixed number of Bitcoin. So, the beautiful thing about Bitcoin is it allows the average person to save in the form of a currency that will increase in value, not decrease in value. That's a big difference. It allows you to retire with comfort. It allows you to build wealth without having to take enormous risk. I mean, I think the world's starting to wake up, and I think the problem is that every intervention has to be larger and more intense. And so the next Fed balance sheet, the Fed balance sheet went from 900 billion in 2007 to, it climbed up to almost 3 or 4 in the low 4s, 3 or 4 years later. And then of course it came back down a touch, and then it went up to 9, and now it's back down to 7. And, I think the next big print, in my view, will take us to 20, 30 or 40. And the whole price level of everything will go up. And that's just math. It's just kind of built into the system. And, we can't really stop it unless we decide to return to a sound money standard. There's going to be literally nobody who wants to own or hold debt in dollar terms. Everyone's going to migrate to something else. And the two possible something else's are Bitcoin and gold. And so yeah, maybe you'll hold your money in Bitcoin. Maybe you'll transfer it into dollars to make a payment where they don't accept Bitcoin. But literally every $3 you have, you will put into these other currencies, which are not getting debased as the debasement gets worse and worse. And I think mathematically, the debasement has to get worse and worse. It's built into the system. I kind of feel like Bitcoin is almost like God-given. It's like God looked down on the world and said, "You guys are really screwed up. I'm going to give you this tool that's going to allow you to break this knot. Yeah. These guys have got you in." And
knot. Yeah.
The Gordian knot. Yeah. And so now people can, basically opt out of that system. You don't have to own fiat. You can save in Bitcoin. And guess what? As it becomes more and more obvious that's the best way to save, more and more people are going to do it. Eventually, there's going to be almost no demand for fiat, or to the extent there's a demand for fiat, it'll be literally to make a transfer into fiat, take that transfer, and then buy something. And then the person you bought it from, they're going to get the fiat, and it's going to be a hot potato. They're going to go buy something else. We'll transfer it right back into Bitcoin or gold. So, yeah. Because everyone knows that fiat is losing value every single day. In the Weimar example, in the last year of Weimar, they were marking up prices by the hour so that you might go out to dinner and, they'd say the price was going to be X, and by the time you finished, it was Y, it was more. Yeah. That's kind of a extreme hyperinflation scenario, but it's not entirely off the table. They print money to excess. Eventually the money will become worthless. We know that. When the ETF got approved in January, February, that was an enormous step. Really, really, really enormous. And so that's allowed, everyday people to put some of their savings and their retirement in it. And it says that the government is recognized as a commodity, and they're not going to take it away from you, at least not now. I mean, maybe Team Blue would. But the second thing that happens is just enormous. The strategic Bitcoin reserve, for the government to admit that this is a form of money that they think is strategically important vis-a-vis other countries. Well, now you're talking about nation state FOMO. So when they did that, that just sent a message to Russia, China, every other nation out there. Hang on a second. Is it possible that this will be the reset, that we'll reset to this and not gold? Oh, well, if that's the case, maybe we need to own some of this. And by the way, there's a fixed supply of it. It's to me, it's still amazing we're not at higher numbers. I mean, what is it? 21 million coins, some of them are lost. Satoshi's got 1 million, whatever. At 42 million, I mean, every millionaire in the world can't have one Bitcoin. So if you've got one Bitcoin, kind of by definition, you're a millionaire. It may only say $80,000 today, but you're a millionaire. As we reset.
According to Lawrence Lepard, more individuals will begin calling for substantive monetary reform as long as the economy continues to deteriorate. According to him, new political figures will emerge and advocate for the reintroduction of sound money. He believes that gold and Bitcoin are the two best choices for a neutral and stable reserve currency. History demonstrates that economies can recover surprisingly quickly when nations switch from unstable, hyperinflated currencies to sound money. Lepard cites the adoption of the US dollar by Ecuador and post-war Germany as examples. The long-term benefits, such financial stability and restored faith in the system, make the transition to sound money worthwhile, even though it may be difficult in the short term. Now, let's dive back and hear what he has to say.
It could be a lot of different forms. It could be just high inflation until everybody screams and we get a reset. I mean, in a worst-case scenario, it could be hyperinflation. If they don't react and print the money, it could be a depression. I mean, they had a similar levered bubble in 1929, and they printed money, but not enough, and not in the right ways. And they actually did a bunch of other things wrong, like the Smoot-Hawley tariffs. We had an enormous economic downturn that took a decade to recover from. So I think all of those possibilities are realistic. I think most likely, though, because Bernanke has painted the depression as as the boogeyman, and deflation as the boogeyman. I think when push comes to shove, as it did in 2008 when they said if we didn't give them TARP, the ATMs were going to stop working, they will print the money. And so when they print the money, we will have inflation. Now, is it going to be 10% inflation or 20% inflation or runaway hyperinflation? I don't know. It depends on who's in charge, depends on what they do. I mean, if Team Blue wins and Andrew Yang puts in universal basic income and Stephanie Kelton is the Treasury Secretary, and we run enormous, right? Yeah, who she is, Mrs. MNP, and we run enormous deficits. Guess what? We got a chance of, hyperinflation and the currency just outright fails. I mean, that's definitely a possibility. I don't think it's a high probability, but it's not zero. So what I like to think of, what I hope occurs, Darcy, I hope that, things get worse. People become aware of the fact that things are getting worse. Politicians, people start to bitch and scream that we need to return to sound money. Politicians emerge would say, you know what? We got to rip this Band-Aid off. We've got this unsound monetary system. It's bad. We got to do a monetary reset. And that's going to have winners and losers. It's going to hurt. But the history shows that when you reset your currency to a sound money standard, things get really better. I mean, they really do quickly. I mean, there was, hyperinflation in Weimar Germany culminated in 1923. They went to a sound money standard afterwards, and the country recovered. Now, they're pretty brutal and beat up, and that's why they were susceptible to being charmed by Hitler, who blamed the unsound money on the Jews. But, Ecuador, for example, had hyperinflation. They went to a dollar standard, and everything got better fast. And so, there's a solution to this, but, my view is it's better to just rip the Band-Aid off and do the reset, and to let it kind of fester and, back and forth and up and down and constant inflation and, 2 steps forward, 1 step back. I mean, it's like, let's just take the pain and go back to an honest system. That's what I believe is the right outcome or the right approach to take. Now, it's tricky because, politicians won't do anything unless there's a lot of pain. And, and they're forced to. Now here we are, years and years later, and we're at a very, very extended place where debt to GDP is a very high number, relative historically, 125%. And, our deficits are large and growing. And in spite of what Doge is trying to do, we're not going to stop that train. Lynn would say. We're going to maybe slow it down a little, but not stop it. And so inflation is really, it's set to become the problem of our age, and we're going to have to address it. And as it gets painful enough, we will address it because people will be screaming bloody murder. And what will happen, I think, is some politicians will emerge who are credible, legitimate, Austrian economists and sound money advocates. And they will say, hey, we need to return to a neutral reserve currency. And the two choices are gold and Bitcoin. Maybe there's a hybrid of those two, but, and we'll go there. And by the way, after that, the world will be a lot better place. I mean, that's, the transition to there may not be pain free, because typically these monetary events create some wide price swings and winners and losers. No way to avoid that. If we wanted to avoid that, we never should have let the bubble form. But, in 2008, they went to 0% interest rates. They kept them there for 7 years. That's nuts. And then they did it again in 2019. And we're trying to run an expansive, growth-oriented, deficit-oriented monetary system on top of a deflationary world. And that's just a fundamental conflict. And when you read the second half of the book, you'll see there's a lot of Jeff in there, where I just talk about how deflation, we have to kill the Keynesian notion that we need inflation for the economy to function. I mean, that's wrong. The economy functioning perfectly well from 1789 to, well into the 1920s, when we kind of first abandoned the gold standard. There were two large periods of deflation, and the living standards in this country went up enormously during those deflationary periods. And we had real growth. That's the other thing. What we're focusing on is growth. And really, in a resource-limited planet, growth isn't the thing to focus on because, taken to infinity, take to the end point, there's a fixed number of resources, right? So the issue really is, for human well-being, is efficiency. How do we get more output for less input? And that's productivity. And so the way you get productivity is you have the price of capital be set correctly. The price of capital is the interest rate. And what we've got a system where it's like the Politburo is setting the price of grain. They're going to have too much or too little grain because they don't know what the market says. So the price of capital, the interest rate, should be set at the point at which savings and investment, demand for investment opportunities balances with savings at some price. That's the interest rate. That's what it should be. And the market will tell us what it is. And so if people save a lot more and there's excess savings, well, then, and then interest rates will come down.
Lawrence Lepard presents an honest and gloomy view of our future. The United States is working under a monetary system that is seriously defective, has enormous deficits, and is drowning in debt. Despite initiatives to mitigate the harm, Lepard thinks that inflation is becoming the main issue of our day and is no longer a remote threat. He cautions that it will soon be impossible to overlook the effects of unrelenting borrowing and money printing, and public outrage will reach a breaking point when the suffering spreads widely and people are genuinely tired of seeing their savings disappear and their quality of life deteriorate. According to Lepard, this will pave the way for a fresh generation of capable leaders who are aware of strong financial and Austrian economic concepts. The current fiat system will be abandoned in favor of a neutral reserve currency as part of a comprehensive monetary reset demanded by these leaders. He is clear, though, that transformation will not be a simple process. Volatility is going to be present, winners and losers will be present. However, history demonstrates that countries that make the transition to sound money from post-war Germany to Ecuador frequently recover more quickly than anticipated and have more robust, resilient economies. Lepard contends that it is preferable to face reality now, accept the pain, by pointing out that the United States saw some of its biggest economic expansion during times of deflation and honest pricing of capital. He challenges the notion that inflation is required for growth. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.